It's a busy time for Starboard. The company is making a $200 million investment in Papa John's. Starboard is also said to be taking a stake in Bristol-Myers Squibb. Joining us now is Bloomberg senior deals reporter Ed Hammond, who broke the Papa John's news. Ed, tell us about the Papa John's investment first, because it is sending the stock up more than 13%.
Yeah, it's a really interesting investment and kind of an odd one as well for a company like Starboard. They've come in, not really as an activist at all, but basically as an investor. Jeff Smith is going to be essentially chairman of Papa John's, so they've obviously come in with a fairly firm agreement from the company, and it's a very big position. We should note, I mean, it's $200 million initially with an option to go up to $250, which at today's price would be close to 20% of the overall stock of the company.
Now that is 20%, so that's for Papa John's. Talk to us about the other investment, because I think this is fascinating. The Bristol-Myers Squibb potentially brings Celgene into the whole mess, and maybe that's why Celgene is down right now.
Yeah, that's in some ways a much more interesting position. Obviously, one we know slightly less about at this point because there's nothing been said publicly. So we reported over the weekend that they had, that Starboard, that is, had taken a position in Bristol-Myers. Unclear what they want at this point. Now, if you look at it, there are really only three things that can happen here. They can say, we like this situation. We just think Bristol-Myers is kind of undervalued because it's traded down. I think it's down about 4% since announcing the deal, about 20% since late last year. So they could say that, status quo. They could say, we don't like the Celgene deal, so we want you to abandon this deal and do something else. That will be harder to achieve. If they're going to do that, they're going to need to get support behind them at the special meeting, which I think is April 12th. And they will obviously try and push for that. And then the third, which I think is a very long shot option, would really be for them to say, we don't want you to do the Celgene deal, we want you to sell yourself. And that doesn't really seem like a realistic chance here, because if someone were to buy Bristol-Myers or were wanting to buy Bristol-Myers, they would have done it, or they would have at least shown their hand. I think waiting for an activist as a sort of accelerant to do something like that, it would be unnecessary in this situation.
Yes.
And presumably, Ed, there aren't many companies out there that could buy them.
That's right, Guy. And actually, a lot of the big companies that could buy them, such as Pfizer, Novartis, have come out publicly and said, we're not going to buy them. And actually, Pfizer just last week, relatively new chief executive came out and said on the record, they weren't interested in big M&A at all at the moment. They felt they wanted to focus on their existing drug pipeline and, as and where possible, do sort of small bolt-on acquisitions.
If it's the middle option and they want the terms of the Celgene deal altered, how realistic is that?
I think it's fairly unrealistic that they could get the terms altered. I mean, is this contingent value right, which is baked into the price? They could potentially try and do something there, but that would be a very, very sort of hairy thing to undertake. And also, you would need a fairly substantial position in Bristol if you were going to do that. Obviously, we don't know the size of their investment, but to have any sort of leverage over a company the size of Bristol-Myers, you would need to be extraordinarily large in the stock, at least in dollar value. And we should note that Starboard are busy at the moment. This is by no means their only investment. They've got the Papa John's one announced this morning. They've also announced about 4 or 5 other positions this year. So it's just a question of, would they actually have the capital to have leverage over the company like Bristol?
Yeah, I mean, they're extraordinarily busy. We're talking about eBay and lots of other companies, and there are other activists involved in some of these companies as well. What will he do as chairman of Papa John's? I mean, can he enact changes quickly and get out of the stock?
Well, he's not going to get out of the stock quickly. I think they have a lock-in period at least until next year. Look, this is a company that's been through a major trauma. You look at what's been going on with their sort of founder and board member still, John Schnatter, who has come out, said some awful things, been very bad on the stock. They tried to sell themselves. That didn't really work out. And actually, I think that process sort of blew up relatively recently. So what will Jeff Smith try and do? I think he will try and run the business as a business. I think he will try and draw focus away from as I say, this sort of traumatic period that they've just gone through. And look, the interesting thing here is their investment, I think it's based on a sort of weighted average trading price up until, I think, February 10th. Or the 10-day price up until, February 15th, I should say. And it's gone up a lot today. So actually the cost of their investment, assuming it trades roughly where it's trading now for the next 10 days, it's going to be quite a lot higher than it would have been when they were looking at it before the weekend.
Interesting. The other question that pops to mind is, where are all the C-suite executives that should be, in line for all of these jobs that clearly are not there, or you wouldn't have these activist investors trying to do the jobs for them?
Well, a lot of them have been tapped up by activists to go and run other companies or sit on slates. And look, I think the activists come in. Occasionally we see situations like this where the activist will come in a sort of conciliatory way and almost be invited onto the board. Usually just as a board member, not as a chairman, we should say. But it's someone like Jeff Jeff Smith, look, he's very well known. He has good experience here because they did the Olive Garden transaction where they actually knocked over the entire board, famously, I think the only time it's happened. So he's not a complete outsider to this industry. They were incredibly successful turning Olive Garden from a sort of underperforming business into a well-performing business. And I assume there's also an element of, look, they have this difficult former chairman. Does Jeff Smith being there sort of put Schnatter into abeyance in some sense?